The global financial crisis has led to increased regulation of the financial sector, and in Australia we're waiting for the government's response to the Murray Inquiry's report into the financial system, and we're bracing ourselves for another wave of regulatory reform. In this context, we're lucky to have with us two Linklaters partners, Gavin Lewis from Hong Kong and James Warnot from New York, and they're here to share with us some of their observations about developments overseas. And what we learn is that by looking overseas, we have an opportunity to gain an insight into what might happen next in Australia and prepare ourselves for it. So I'd like to begin, Gavin, by asking you about cross-border and multi-regulator investigations. I understand you've been involved in a number of them, and I'd be grateful if you could describe what they're like and what their implications for future practice are.
Thank you, Matthew. We've seen a lot of activity from the global regulators, beginning really with the watershed moment, I think, with the LIBOR investigations and then the Forex investigations. And what we've seen is a great flow of information between the US, UK and regulators in Asia and Australia about this information, and collectively between them try to work out exactly how they should share information, what is best practice in running these investigations. And I think that watershed moment has established clear gateways of cooperation between them that I think we might see reflected in future investigations.
And Jim, when Australians look to the US environment, one of the things that strike us is the number of times criminal charges are laid against people with a financial sector background, and that those criminal charges, when they result in convictions, result in very substantial jail terms. I was wondering if you could sort of describe the US policy on criminal law enforcement and how that affects the way clients do business.
Certainly, Matthew. The policy of the U.S. political system, regulatory system, and of the Department of Justice is that the most effective deterrent to future improper conduct is the most severe sanction possible within the regulatory and statutory framework, and that tends to be a criminal sentence wherever possible.
And does that affect the way a client responds if an investigation begins into a company and some of the employees are potentially in the firing line? How does that affect the response?
Well, where employees are potentially in the firing line, there are some difficult choices to be made as to who will represent those employees and whether at some point the company needs to cut itself off from the employees. But certainly it is a major factor in a company's consideration of how to deal with these inquiries.
Now I'd like to talk a little bit about culture, or more specifically compliance culture. So Gavin, there's a reasonable amount of talk about in Australia, but not a lot of published regulatory and policy material about culture. And I was wondering if you could sort of give us a bit of a description about the way culture is being regulated in Asia and elsewhere.
Sure. I think the FCA has, in large part, been leading in this regard, perhaps because of a sense of fatigue amongst the regulators and shareholders and the like about whether the level of fines that have been imposed have really helped to resolve some of the underlying conduct issues. The FCA is looking very closely at conduct risk and has prescribed through the senior managers regime, which is coming into force in the near future, some very particular requirements about people within businesses in senior risk-taking roles taking responsibility for what they do and mapping with responsibility maps within businesses from top to bottom areas of regulatory responsibility. They've been actively driving this agenda, and I think regulators elsewhere have followed this quite closely. For instance, in Hong Kong, the Securities and Futures Commission has been sending the message to the market about the need for senior people in the business, in the first line of defence, really to start to own the relationship with the regulators, who will be expecting to have a dialogue directly with people in the business, following on, I think, from what's happening in London with this senior managers regime.
And Jim, is the US going down the same path?
The U.S. is emphasizing the importance of culture, Matthew, but I think in a somewhat different way. It's not being legislated, but in the various pronouncements that are made by the regulators and government officials, principally in the form of speeches to various bodies, they emphasize the importance of culture, but it actually gets implemented in a number of different ways. One is individual responsibility, as we alluded to earlier. Second is really increased fines. And then finally, the remedial actions that are imposed in the various settlements, which of course the entire industry can see and use as a barometer to govern their conduct.
And Gavin, this, I suppose, more prescriptive approach with responsibility mapping, does it give rise to any issues where the people on that map are located in different parts of the world?
I think obviously a theme throughout all of this is the cross-border nature of international finance. Matrix management with functional reporting lines into different regions obviously causes some tension with the desire of local regulators to understand risks that are being undertaken on their watch. So certainly something that the FCA is looking at present is in remote booking models where, for instance, trading from Sydney may be booked to London or from Hong Kong is booked to London or other patterns, who within the overseas jurisdiction, be it Sydney, Hong Kong, Singapore, is taking responsibility for that book of business in London. And what we're starting to see happening is the accreditation of people within London, if that's where business is booked to, with responsibility for the risks that are being undertaken in overseas countries. So there's very clearly a focus in these remote booking models and a drive towards simplicity and perhaps to some extent localising the understanding and management of risks in that way.
Okay. A final question for you, Jim. An international financial action task force has just done a review of Australia's anti-money laundering regime, and I think the short point is that we've got a pretty mixed review, mixed report card. The impression I get is that sanctions compliance and foreign corrupt practices compliance is a much bigger deal in the United States than it is here in the moment. And I was wondering if you could just explain some of the features of the US environment.
That certainly is the case, Matthew. The two regimes have somewhat different purposes and somewhat different implementation. Sanctions are really a tool of U.S. foreign policy to try to isolate certain regimes such as Iran, Cuba, Sudan, and the rules that are put in place effectuate those purposes. With respect to the FCPA, the goal there is basically to prevent bribery of foreign officials. It has quite a long history, but has been dialed up very significantly over the last 10 years with both U.S. and foreign companies, probably more so foreign companies.
Okay, well, thank you, Gavin and Jim. I think we know that regulators here and elsewhere are watching what each other do, they're learning from each other, and so there's a reasonable chance that something that's happening overseas is going to make its way here in due course. And certainly there are no indications that the wave of regulatory activity in the financial sector is going to end very soon. So thank you very much, Gavin and Jim, for sharing with us those insights into life overseas.
Thank you.
Thank you,
Thanks,
Matthew.
Matthew.